Buzz investing, in which GameStop was the poster child, has surged. Last week the stock soared again back towards its January levels, but this time with much less fanfare. So what's driving this recurring price action? And is it sustainable? I asked Richard Peterson of Market Psych, who looks for investment opportunities within media trends.
So what we are seeing in our data is a steady rise in buzz about certain stocks. And we do have some videos where we can even track over time the buzz of certain stocks, and you can see them percolating along, and then some will take off and become more and more popular. So whether it's Dogecoin or GameStop or AMC or silver or any number of assets, it's really how infectious is the idea behind it. So how emotionally resonant is it, and how enthusiastic and charismatic are the leaders? And what we're seeing over time is this accumulation of buzz is, in the data that we produce, as people are becoming more and more enthusiastic about that meme. So you not only have the emotional resonance, but then you can see it sort of virally infecting people in the social media and watching as they become more and more attentive to that theme.
For investors looking to play these momentum trades, there are some key relationships, especially on the downside, as Richard outlines using the GameStop example from January.
We see the price and the buzz together. So when the buzz starts to rise and there's this increasing attention, if the price is also rising, that tells us that there's likely to be momentum. So we have done some quantitative studies on this data. And what we see, the best indicator is the steady rise in buzz, almost an exponential curve in the buzz, when that is paired with the similar rise in the price. And in fact, it generally slightly precedes it, because then the next day and the next day, we'll see a momentum effect on the price where the price continues. But interestingly, that's also true on the downside, and it's actually a stronger effect on the downside. So when a stock drops dramatically and the buzz rises, then we tend to see that it'll continue dropping for the next few days. So we see this buzz effect both amplifying on the upside and amplifying on the downside as people are complaining and saying, what's happening? That also affects the selling on the downside. But once the buzz reaches a very high level, and then the price drops dramatically, as you see, at a top, obviously, then you know that it'll start to unwind. And that unwinding is more predictable than the upside, because a lot of stocks do start percolating and seem to take off, but only a few make it to the big leagues, right? They gather a lot of attention. And those can be tracked, but it's the probability of catching those is less than catching a top based on a collapse in buzz, or a collapse in the price and a rise in buzz.
This type of investing has brought a whole new audience to the market who seized upon this opportunity, even though many traditional investors expect or even hope that this investment style will ultimately fail.
People are at home, they have time, they have stimulus checks, they have the resources and the time, and often, at least one of the themes that's being run in these message boards is people are disaffected. They're feeling that they don't have a voice, or they don't have enough wealth to really get forward in society. And they're seeing this not as a casino, but as a new way to actually get enough resources to establish yourself in society. And especially if the predominant population is young men here, rather than slogging it out in a profession or a long-term career, this may be a fast wave they perceive to become financially stable and solvent and successful long-term.
One of the big questions around permanence is whether regulators will step in to curb some of this momentum-based activity.
Well, the big question, I think, with this is, will there be enforcement actions by the SEC, for example? So right now, it does seem as if it started small and it's still niche, but it's been going on for decades. It's just that many people were worried about enforcement actions taken against them for stock promotion and insider trading. And that worry has come up again, because in Japan recently, there's a case from 2008 that was prosecuted where somebody was promoting a stock in a similar fashion. And he was a well-known online personality and promoted a stock and made money from obviously the bull run. And when that happens, then there is this idea that maybe there's some illegal collusion happening, and that is not, of course, allowed to manipulate stock prices. So when the financial authorities get involved, then we may not see this continuing the way that it's been continuing. But if that doesn't happen, if it is allowed to continue, so to speak, then yeah, I think it will be ongoing. And what we'll see is it aggregates around a few charismatic personalities who are very good at promoting certain concepts. So I do think that's, the likely outcome.
Although we've used GameStop as the example here, it wasn't a one-off, And this form of investing has been around for years, but social media has given it an impetus. Regulators may want to curb this activity, but at its heart are the conditions that have allowed individual investors to combine cheap access to data and trading exchanges with the power of social media. And that trend is not going away.